Welcome to Know Your Insurer. Today we are joined by the very capable and very experienced John Giannikos from AIA Australia. AIA Australia is one of the leading insurers in Australia, and John brings with him a wealth of knowledge and experience in the industry. He has been in the industry for over 20 years, has had a background in claims, and now leads the technical team at AIA Australia. This makes him the perfect candidate to dive deep into what AIA has to offer our customers and also understand more about the insurance industry at large. Welcome to Know Your Insurer, and today we're joined on the podcast by the very capable John Giannikos from AIA's technical team. Thank you, John, for joining us today.
Thanks for having me, Priyanka. Looking forward to it.
Absolutely, thank you, John. This we've compiled a list of questions, commonly asked questions from people that I deal with as a risk advisor, that I deal with day in and out. A lot of AIA clients as well, and we've kind of put it together so that we can ask you and get your insights and expertise on that, and know um, help people pick AIA as and maybe make a more informed decision about the insurance products in the market.
Of course, of course.
Can you give us a brief overview about AIA to start with?
Sure thing. So, look, at my time at AIA and in my role, I work in what we call the techie team, and we support our distribution team with respect to letting them have, I guess, better conversations with advisors such as yourself.
Sure,
And essentially, what that means is, allowing them to hone in and understand why that AIA proposition is such a strong one in the
sure,
market.
sure.
So, I'm happy to, obviously touch on a number of areas for you today. Essentially, we can walk through some of the sweet spots that AIA has with respect to its product offering. But I think in a broader sense, when we think, and I would like to think when we talk about AIA, we think about, AIA's broader proposition in that broader ecosystem. And what I mean by that is it's not just a life insurer.
Sure.
It obviously has a health offering and a broader health and wellness offering through its vitality program, which we're extremely proud of.
Yep.
So
Yep.
as you've probably heard with our logo, living longer, better lives, and
Sure.
it's such an important part of our particular proposition there.
Yes, absolutely. And vitality is such a unique part of the offering that AIA has, which I believe it's not available through any other insurers as such.
No, it's fairly unique with respect to what it actually does. So, for the benefit of your audience that may not all have that, I guess, finer detail around vitality, I think the important thing here with vitality is what it does is it rewards your clients or policyholders for making the correct health choices. So it's beyond just say giving you a discounted initial selection discount. While we
Sure.
do have an initial selection discount as well, independent of that,
Sure.
the actual vitality program allows you to tap into, yes, discounts, but it is something that doesn't erode if you engage with the program. And this is
Sure.
very different from maybe a discounted first year premium that's very high as an initial selection discount that does erode over time.
Correct.
With
Correct.
AIA, if you engage with this vitality program,
Yep.
you're going to, first and foremost, you're engaging with your health and well-being.
Sure.
So from that perspective, the way AIA sees it,
Yeah.
it's a win for the client with respect to them making the correct lifestyle choices. From an AIA perspective, of course, they're able to add an additional value there, which is unique in the market. And a healthier book is
Absolutely.
also in the interest of AIA. It's in the interest for you as an advisor because it helps with the sustainability of the
Of
premium
the
if you've got a healthier
Yes.
book as well.
Yes.
So
Yes.
that's
Yes.
part of the reason we believe so strongly in
Sure.
AIA and everything that is involved with it.
Sure. And is there any assistance available from AIA with Vitality? So in terms of explaining clients how to use it, how to
Of
engage
course.
further in it, and things like
Of
that.
course, there's a wealth of literature online where, and we've recently updated a lot of our particular collateral to make it even simpler to actually understand. In addition to that, we've got a dedicated call center that actually
Okay.
deals with these
Just for
types of
vitality.
queries just
Okay.
for vitality, and
Okay.
they're amazing. So whether it's just about activating the actual application, how they can tap into rewards such as maybe flight benefits. Yeah, look, there's a lot of assistance in that regard. And the
Sure.
other exciting thing that we've actually done with Vitality, which I'm hoping I might have a minute or two to discuss today, is we've
Absolutely.
recently launched our Silver Reward program. And what that's about is it's not just a matter of viewing Vitality. We're acutely aware that as good as Vitality is, there are unfortunately some people that haven't really
Yep.
engaged with the
Yep.
program as much as we would like. So, with this Silver Reward program, it's actually to incentivize clients to, get that health check and maybe complete, some statements online that actually look at their health, make their mental health, nutritional responses. These are really simple things that they can complete through the app.
Sure.
And getting that health check means that goes a long way to them reaching 10,000 points. And what do I mean by that 10,000 points? That gets you to silver status. And the
Sure.
exciting thing that we've launched recently is for our clients that actually take out a life insurance policy and reach that silver status of 10,000 points within 6 months. We'll reward them with $500 for reaching that
That's
particular status.
fabulous. And from the sound of it, it's fairly easy to reach it and it
Yeah,
doesn't take much at all. And
absolutely. Yeah, absolutely. There's a wealth of literature, advice that we can actually give. So, for example, a health check on its own, and you can just book that through a Terry White chemist and other chemists that we actually have on board partners there. You can make that particular booking. It's free of charge.
right,
Or you can
okay.
go through your normal GP. If you've got a
Sure.
checkup pending with
Sure.
your GP, and they go through a few things such as, like blood pressure and so forth. It's not anything too onerous, and you can get up to 7,000 points just there. So that's 70% of the points just in one hit right there.
Right,
So
okay.
we've had a really good response already because with the particular response, we're seeing people in some cases reach that particular 10,000 points within a few days.
I could
So
do
it's
that in a
it's
few
really
days as well.
absolutely. And for what it's worth, I'm a platinum member, which is 30,000 points, and
Right.
it's not that difficult. It really is. But it's that first step because if we can get them to reach that silver status reward and, of course, reward them
Sure.
with that $500,
Sure.
the advisor, if on board, with the program is also rewarded $500. So
Okay.
there's a nice initiative there to actually position it. And that's through simply the assistance that advisors provide, I guess, to, you know, promote it
Sure.
and encourage clients to actually meet that particular silver reward within that first
Sure.
6 months.
Sure. Sure.
But
And
that's the first step of the journey. Sorry, I interrupted you
no,
there.
that's
So
okay. And I think it's all about getting the client started. So once they get
that's right.
started and they understand
Of
how it
course.
works, it's pretty much autopilot from there. Like you don't have to do
Absolutely.
much then.
Look, that's correct. Now, one of the important things is, and there's certain things that you can kind of look out for with your client, and that could be that if you're already sitting down with them and they're actually wearing a wearable,
Sure.
which a lot of people do, of course, these days. If that's linked to your vitality, which is obviously a matter of seconds, it's that easy to actually do.
Sure.
That those steps that you take will reward you with. If someone walks 7,500 steps, that's 50 points a day. If they walk 12,500 steps, that's 100 points a day. And with that, there's rewards that come with that. So they're
Sure.
engaging with their health, but there's just so many rewards that come with it. Reaching that gold status, which we want people to move on to, which is at 20,000 points, means they're able to maintain the discounts that
Sure.
are associated with the Vitality program, which is in contrast, for example, like I mentioned earlier, to initial selection discounts that erode over
Sure.
time. In
Sure.
this particular case, Vitality allows you to control the actual
That
discount.
discount. Yeah.
So as long as the client engages, which is not difficult, they're able to actually reap the benefits of better health outcomes
Absolutely. Which is primary. And then if,
first and foremost.
yeah.
Now, I know a
Yeah.
lot of people look at, the discounts, which for lump sum, it's 17.5% and 7.5% for IP. Now, they're all great, don't get me wrong, and you've got the opportunity to maintain those discounts over time if you engage with the actual program, which, as I mentioned, isn't difficult.
Sure.
But in so doing, you're doing it for the benefit of your health, and that's the most
Absolutely.
important thing.
And people tend to forget that in the equation of everything at large. So
That's
it's a
right.
good reminder that,
Yeah, look, and I think what we've seen is there's a lot of science-backed, research on this. That I guess by having rewards in the background, I guess it's kind of that carrot that kind of keeps people on board. So,
absolutely.
for example, for some people, it might be they're planning an overseas trip.
Sure.
And in that particular instance, so we've had the opportunity, both my wife and myself are platinum members, which means you get 50% back on
Huge.
domestic and international flights.
Huge.
So that is
Wow.
huge. It's a
Yeah.
really good incentive. So for some people, an incentive like that might mean, gee, I really want to get to platinum status. And
Absolutely.
maybe in their mind, it's because they wanted those discounted airfares, but in the background, they're improving their
And
health.
imagine they'll be on the holiday with a ripped body and
Well, even better, even better. So, absolutely. So, look, we certainly see benefits with that, and the broader ecosystem as well is it's intertwined also with AIA's health offering. So,
sure.
our health offering. So, someone who takes our AIA Health,
Which,
or
sorry to interrupt, that's
yeah,
the health insurance and not life insurance.
that's correct. That's correct. But
Okay.
there is a relationship there, and what I mean by that is those that select AIA Health are able to get they get complimentary Vitality membership.
Right.
Now, if that same individual who's got the health and that complimentary Vitality, if they add a life insurance product,
Sure.
they also get a 5% discount on their life insurance product
Sure.
as well.
Okay.
So it's intertwined, and it's that broader, as I mentioned, ecosystems where health insurance and life insurance, as part of this health and wellness program, are
Sure.
working together. And the benefit to you as an advisor and other advisors, of course, is we have a referral process. So you don't need to do anything else other than ask that simple question of the client, whether or not they're reviewing their health
Sure.
insurance.
Sure.
We have a call center,
Sure.
and from there, that's all you need to do. There's that
They'll
referral
take care of it.
process,
Okay.
and the benefit there is they walk through the client's current cover, if you like.
Sure.
They'll do a comparison, a like
Yep.
for like comparison.
Yep.
If they feel that the client is okay where they are, end the discussion, leave it alone. But if they feel that they've got a better offering
Sure.
in place, then that's something that we can position for the advisor. There's a 20% first year commission
Sure.
on that particular
Sure.
premium. And
Sure.
if you think about it, someone that's positioning, say, cover for their entire family, it's
Yeah.
not unusual to have cover for $5,000 or $6,000
Sure.
per family per year. As we
Yeah.
know,
Yep.
health premiums have been going
And
up
yes,
over the years.
absolutely. And I've
So
got it
that's
myself.
so that's $1,000 or more as part of just a simple referral. So
Sure.
certainly something worth considering as a form of revenue, and making it part of your advice process.
Sure. And I've experienced that. I've referred quite a few clients through the health channel, and they've come out very happy with the experience they've
Of
had.
course.
And just the idea that they are able to have everything in the same umbrella, kind of the ease of convenience that comes along with that, is also something that a lot of people have considered as part of it. And AI is pretty unique in that way that it does have the health and the life offering together, which I don't think any of the other retail insurers do.
Of course. It is actually a little niche thing in there that your listeners may not be aware of, but just a little bit of a heads up with the actual AIA Health. Now, if the client reaches silver status or above, there's a further benefit in addition to that a silver reward that we've always had in the actual health offering as well.
Sure.
So if you have AIA Health and you're a silver status or above, the hospital excess is waived.
Right. Okay.
So just a
Yeah.
little bit of a heads up on that. So even more reason to kind of engage with the actual Vitality program. So
Sure.
yeah, it's a little nugget in there,
Right.
which a lot
Yeah.
of people probably overlook.
Absolutely. And there's a lot of win-win from the looks of it, that there's a lot to gain out of it without doing much. So absolutely.
That's right.
Yep. Now, thanks for sharing that, John. Also, just understanding. So, from a customer perspective who's shopping out in the insurance market, trying to see, and he's come across all these different insurers, not understanding how they're different from one another, which one should he, is there anything in particular he should be focusing on or looking at, apart from the price, obviously, because the premiums
course.
could vary, but what else should people be looking at when they're considering the insurers?
Oh, look, no doubt. And I think there's a lot of things to consider. So I think with respect to what I've said about AIA and the broader benefits of, say, the Vitality program, the rewards that come with it and the health and wellness, from a product perspective, I think it's really important that you look at a particular offering that suits the individual client's needs as well.
Sure.
So rating houses play a really important part with respect to giving you a bit of a guide around, what features matter, but they may not always matter for your client.
Sure.
And I think we're having a conversation about this a little bit earlier. So an example might be you might be wishing to position trauma or critical illness cover. And, depending on whether or not you're sitting in front of a male or a female. So, for example, if you are sitting in front of a male, you may want to look how strong is their definition of, say, prostate cancer, which is the most diagnosed cancer, obviously for a male in Australia. So that's a really important thing. Now, it's probably not going to matter as much if it's actual female, but just keep those particular things in mind. That could also be said for when we look at ratings. There's certain features that are what we call optional extras, as you know.
Sure.
And they mean just that you need to pay extra for it. Now, you will find at times the rating houses will add additional points because a particular insurer may have that optional extra.
Sure.
But if you're not going to consider that optional
Right.
extra, it's totally irrelevant to the actual discussion
Sure,
of saying,
sure.
they've got an extra point because they're
have-
actually offering, for example, a 14-day buyback option. So
Which
just something
the
to
client
keep
may
in
not
mind.
need it, or it may not be.
Or they may be
relevant.
satisfied with 12 months,
Absolutely,
for example.
absolutely, yeah.
So don't get me wrong. For some, it may be of prime importance, but
Sure.
I just think we just need to be conscious of that. So as important as ratings are,
Yep.
and don't get me wrong, AIA is a really well-rated product, but as important as ratings are, you also need to factor in what particular features are important to your client. There's also other features that aren't considered like core score ratings. They might be
Sure.
supplementary, but they may be really important to your
Right.
client. And I'll give you another really good example.
Sure.
With AIA, if you again hold what we call crisis, which is what most in the industry call trauma or
Yep.
critical illness,
Yep.
we have a built-in complementary family protection. So what that means is every last one of the client's children are covered for $20,000
Wow.
in the event of a crisis event, a listed crisis event,
Sure,
or the death of a child. So for some, I know, and I've had conversations with advisors about this. Some advisors may not always be comfortable in positioning child trauma.
cover, yep.
This is maybe a good little segue into it because this is a complementary feature.
Sure.
If they also take out child trauma,
Yep. Yep.
they have no impact on each other. You can get both.
Right.
So
okay.
it's
So
really
that would not
beneficial.
actually offset the.
Not at all. Nor
Right,
does it
okay.
offset the adult's policy as
Sure,
well. So $20,000, that's a leading feature that we have. It doesn't really get you extra rating house points. It's just hidden away under other supplementary
Sure,
benefits, but
sure,
it's an amazing feature for children between 2 and 17 years of age. So
sure.
really important example there.
Absolutely. And I believe these are things that a person maybe just generally reading a product disclosure statement or just looking into like comparison tools may not be able to like pick up straight away, but maybe speaking with an expert or an advisor or a life insurance advisor would help them understand the relevance of the
Absolutely.
offerings very well.
Absolutely. Now, I think also with income protection as well, because I know that there's been a lot of talk about, well, obviously, we've had major changes with respect to income protection, and I
Yeah.
know that many advisors are finding it challenging with respect to positioning IP in the new world since
With
the
the
APRA,
premiums
with the
as
APRA.
well.
Well,
Yeah.
that as well.
Yeah.
From a legacy perspective, yes, there's certainly been an impact
Sure.
on particularly longer age 65 benefits for in-force premiums. Yeah, no doubt.
Yeah.
So there are challenges in that particular space. So it's also allowed us to probably, in our techie team, and that's my my manager Benjamin Martin, who
Sure.
and we've put together a few presentation packs around maybe different ways of looking at affordability
Yeah.
of income protection, and some of those may be whether it's positioning new income protection or even in the in-force space, maybe considering maybe certain haircuts for clients, and they might involve, for example, considering converting your age 65 cover to maybe a 5-year
Fine.
benefit period.
Absolutely.
And we have strategies around that. So obviously, it's a significant premium saving. Yes, you're lessering your
The
benefit
cover
period.
period. Yep.
Yeah, but I think some of the considerations, and it's not necessarily for everyone, but if they've got a sizable amount of TPD in the background, if a client's totally disabled for 5 whole years, there's a pretty high likelihood they're TPD as well.
Fair enough. Yes, absolutely.
So
And TPD, I believe, is a more affordable cover to have for the longer run versus
that's
an IP
correct.
till age 65.
That's correct. That's
Yeah.
correct. So we've done some maths there. And I think it's also important to consider that with TPD or lump sum in general, it's not a set and forget strategy. So it may be that when you're sitting in front of a client who's got a large mortgage,
Sure.
maybe kids at school, the school fees and other debts. Look, it's pretty easy, I guess, to say, well, okay, they need a certain level of cover to look at that if they are permanently incapacitated. Over time, as that client gets, I guess closer to that retirement age,
Yep.
they've reduced the level of their mortgage.
Sure.
It could very well be that if affordability as well in turn is an issue, it could very well be that that level of TPD could potentially be reduced.
Sure.
So something to keep in mind. So,
Sure.
but that combined IP and TPD strategy of say maybe a 5-year benefit period with TPD
Yep.
can work for some, and we're happy to discuss it further maybe another time as well, because we've put together some really good papers that show you maybe
Right.
what the savings are
Sure.
and how they can couple up quite well with
Sure.
TPD as well.
Sure, that's great to know. Thank
Sure.
you for sharing that. And these are some strategies that are great to keep in mind where you're wanting to get the right cover without having to spend that extra dollars and having to, like, drawing the fine line between keeping the cover and being
That's
out of
right.
pocket.
I
So,
think the paper that we put together, it's called Something's Better Than Nothing,
right.
right?
That's a
And
great title for it.
we liked it. Yeah, we liked it because I think because you hit the nail on the head. What we don't want happening is people completely cancelling their insurance, particularly at the wrong point in time. We've seen
Absolutely.
situations where people have kept the policy in force for all these years. They're feeling the pinch,
Yep.
and they feel that the only solution is to get rid of their insurance. And then, unfortunately, maybe a year or so later,
And things
something
happen.
something happens. Life happens.
Sure.
So we would prefer that that particular client look at maybe haircuts that they could consider rather than cancelling the
The
cover
whole thing.
altogether.
Yep, absolutely. Thank John, the biggest question on everyone's mind. Let's address the elephant in the room. Claims. Everyone wants to know about it. Is AI going to pay the claims? Are the insurers paying the claims? Tell us all about it.
So you've really put me on the spot, right? So with claims, look, by way of background, I started in claims, and so I've got a lot of experience in terms of assessing claims,
Sure.
as well as maybe working with claims departments. And look, ultimately, claims is where the rubber hits the road, right? So it's delivering on that promise and understanding that it is their time of need. So
Absolutely.
it is so important. It's so important. So I guess there's a misconception as well out there by some that insurers don't pay claims.
By most, I would say, but yes.
Yeah, yeah. So I think one of the things that to keep in mind is every 6 months, insurers need to report to APRA, things such as, acceptance rates, as well as maybe time to decision. And I think that's an
Right.
important thing because what it essentially shows is that it is important that they are actually people are getting value for what they're actually paying for, and you can see that in terms of acceptance rates, which I'll touch on in a moment.
Sure.
But as well as turnaround times around, because it's obviously quite important that a decision's arrived at in people's time of need. So
Sure.
I mean, what I'll say is, for example, it's something like income protection. Obviously, that has the most touch points. So being a monthly contract. So,
Correct.
but
Yes.
the reality is that over 95% of income protection claims are in fact paid. Now, it could
Wow.
be on that ongoing monthly basis.
Sure.
There's requirements or certain impasses over that time. But the reality is, based on all the data that's actually provided amongst, pretty much every retail provider out there, those particular acceptance rates, and also I should also add, groups also are subject to that as well. There's separate reporting around it.
Yep. Yep.
But, the acceptance rates on something like income protection over 95%. Life cover claims or death claims, again, well over 95%. Even TPD, I've heard historically, maybe the odd advisor say, "Look, you need to be in a wheelchair, or it's almost dead, if you like,
Yep.
for a TPD claim
Yep.
to actually be paid." I mean, the reality is the acceptance rates are, give or take, every 6 months or so, around that 85, 86% mark. So
Right.
probably a lot higher than
Sure.
people would think, even for something like
Yeah. Yeah. Yeah.
TPD.
Absolutely. Yeah.
And again, the last time I looked, I think trauma cover, we're probably looking at around 87%, again, acceptance rates on
Sure.
trauma cover. The also important thing about trauma cover as well is usually because it's diagnostic based,
Correct.
for the overwhelming majority,
Yep.
claims,
Yep.
heart attacks, strokes,
Yep.
what that means is the time to decision is pretty quick. So
Yes.
I've seen
Yes. Yes.
cases where you're looking at a trauma claim that's been paid and finalised within a matter of days. But on average, it's a
Yep.
little over a month, according
Sure.
to APRA. So that's pretty
Sure.
quick. Same could
Yep.
be said for normal, most death claims are pretty easy.
Right.
Income protection, again, relatively quick to arriving at a decision on that initial assessment.
Sure.
TPD, of course, can be a
That
bit more
that would be
challenging.
the one that may take the longest. Yeah.
That's right. And I think part of the reason for TPD is there's no in between. It's either yay or nay.
Sure.
And because of that, there needs to be a level of, I guess, certainty around, well, is the client permanently incapacitated, whether or not it's an own OC or an any OC definition from performing that particular occupation or any occupation they're suited to, depending on the definition. And that can take time
Sure.
because you're highly reliant on medical reports of treating doctors,
Yeah.
specialists,
Yeah.
at times maybe an independent medical report.
Yeah.
So it's not something that's arrived at as quickly, I guess, as a diagnostic-based assessment such as a trauma assessment.
Sure. Sure. No, absolutely. And I can testify to all that information to an extent because as an advisor, I've dealt with claims with AI and multiple insurers, and um, thankfully they've all been paid. The experience has been pretty all right, and they've all been paid in a decent turnaround time as well. So that's giving some level of assurance and comfort to the people that the insurers do pay.
Oh, that's good to
And
hear. That's good to hear.
yeah, yeah. So thank you for that. But between all these different covers like life and TPD and trauma income protection, is there a particular type of cover that tends to get the most claims versus the others or things like that?
Yeah, so from an incident rate perspective, look, I'd probably suggest that income protection claims, not just because it's the most likely event to happen, because obviously the bar's obviously a lot higher. I mean, if you start with life cover,
Sure.
you're paying out for someone's death or terminal illness.
Correct.
So again, that's the least likely scenario. The next least likely scenario, I guess, is TPD. That's why TPD is cheaper than, say, trauma.
Sure.
Now, trauma, often overlooked by some, is a higher incident rate. You're far more likely to have a trauma claim than you are a TPD claim because it's not tied to whether or not
Yeah.
you're permanently incapacitated. But that's part of the reason why trauma cover is far more expensive than
Expensive.
TPD cover. And then income
And going
protection,
to people's lifestyle as well. Like
that's
the
right.
incidence of people getting things like cancer and heart attack is so much higher
Of course.
these days
Of
compared to,
course.
yeah.
Of course. And I think one of the other things I recently attended a industry breakfast, actually, in fact, yesterday. And we had a doctor speaking about trauma insurance.
Sure.
And with that particular presentation, it was maybe talking about diagnostic tools now because they've improved so much more. We're actually arriving at certain diagnoses earlier, or I guess, say with cancers, for argument's sake,
Sure.
we're arriving at that particular diagnosis. A good example might be skin cancers in Australia. With improved screening, they're picking up cancers at an earlier stage, which is, insurance aside, is an excellent outcome because what it means is people are more conscious of maybe getting their skin checked or
Absolutely.
having things such as pap smears or having mammograms and so forth and so forth. So it is one of the really good progressions where by being more proactive about getting these checks, if something is found,
Yeah.
it's more often than not it's found at an earlier stage, which
Yeah.
means that the prognosis can often be far better.
Sure, sure. And that gives them access to, if there is a trauma cover, they can have access to then get the best treatment possible. And
That's
yeah.
correct. That's correct. So if they've been one of the real selling points for me when I think about trauma cover is it gives one choice. And it's not tied to whether or not you're permanently incapacitated, but you've suffered in many instances with trauma, a life-threatening event. So in
Sure.
that particular case, you want to have access to the best possible medical treatment available to you. Now, while it's extremely important to have private health cover in those circumstances, it's unfortunately people are often surprised that there's still significant out-of-pocket expenses by just having health cover. It's not going to cover every single thing.
Sure.
Good example, the two most commonly diagnosed cancers in Australia for males is prostate cancer, for females it's breast cancer, of course. And in that particular instance, you do find that even with health cover, there are significant out-of-pocket expenses associated
Right.
with that. So having something like trauma to assist you, not just for time that you've spent away from work or on medical treatment, surgery and so forth, but also often what we find is maybe the partner, the spouse or the children, they may have to take time off work, time off school and so forth
Sure.
to support that family member. And, there's out-of-pocket expenses associated with that.
Absolutely.
So-
And thank you for answering that because that's such a big question on everyone's mind, especially why would they need trauma cover if they have health insurance? And that answers it very well. So thank you for that.
No problem.
And I think, yeah, that's great information. I think last question would be, is there anything in particular about AI that you would like to share people in the industry market at the moment, either an existing AI customer or people exploring to know about AIA's offering?
Are you talking in relation to a claims outcome, or are we talking about just broader with
Just
respect
broader,
to the
just
offering?
mainly addressing maybe the people in the industry, in the insurance market at the moment looking at the options?
Of course. So, what I would say from an AIA perspective, which earlier in the piece where I touched on saying that, look, we're more than just a life insurer. We obviously recognize that there's a broader need for health and wellness in general. And, the complement to that, of course, is also our health offering. Now, we've got a really competitive product offering. We've got, obviously what I mentioned around the health and wellness programs and the rewards associated with that. And the feeling for us is that we are looking to individuals saying that we want to not just offer you, as important as the claims outcome is on the back end, we have a really strong focus on the health and wellness of our clients, in a preventative space. And that is a growing area of medicine. So there's so much focus in Australia and in most Western world countries. We know that life expectancy has improved significantly over the years. So
Sure.
I think off the top of my head, the turn of the 20th century, so over 120 years ago, the average life expectancy in somewhere like Australia was around 52, 53 years of age.
Yep.
Now we're looking at over 80 and growing. So I think a child, I think they say born today, is the life expectancy will be over 100 years of age.
Wow.
So this is a really important thing. So yes, we're living longer, but there are pros and cons to consider here, because it means many people are living longer, but living longer with disease. And that's what we call the burden of disease.
Sure.
And so we
Sure.
still have issues in relation to diabetes being a growing issue in Australia. So
Yep.
that whole preventative medicine
Yep.
side of things is a really important consideration, and I feel that at AIA, being a broader health and wellness provider,
Sure.
we focus greater on what we can do in the preventative space, not just in that end stage
In the
where someone's
reactive
already
stage, yeah.
had to claim. So
Yeah.
I think that's where you value, and I think the value there as well is people see the tangible benefit
Sure.
of the insurance contract
Sure.
that they hold, not just at claim stage.
Sure.
As important as claims is, of course.
But yeah,
hope you see where I'm
absolutely.
going.
Yes, yes, absolutely. And thank you for sharing that. That's some really good insights, John. And it was a pleasure having you today with us and sharing all this wealth of knowledge and experience and insights with us.
My pleasure,
So thank you so
Priyanka.
much.
Thank you so much.
No.
Thank you.